All right, welcome to this episode of Whiskey and Wealth Tech. I'm your host, Alex Sermon, Managing Director here at First Rate, and today I am joined by Pete Baksh from First National Bank of Mount Dora. Pete, thank you for joining me today.
Well, thank you for having me. It's a pleasure to be here.
Excellent. So we'll go ahead and just dive right into the whiskey. We've got a very interesting one this episode. So we are jumping into the Compass Box, the story of the Spaniard. So if you can see the bottle here, it's got a really cool artistic label. Most of the Compass Box whiskeys do. But this is a blended malt Scotch whiskey. So it's a little different. So if you're familiar with single malts, blended malts, instead of this being from one distillery, this is actually a blend of whiskeys from several different distilleries all around Scotland, but all malt whiskeys, so no grain whiskeys, anything like that. But with that, let's give it a taste, Pete.
Sounds like a plan.
Cheers.
Cheers.
That's really nice. That's so it being called the story of the Spaniard, this is a mix of whiskeys that are typically finished in Spanish wine casks. So primarily different kinds of sherry, things like that. And so like a lot of sherries, I'm getting a lot of raisins, dried fruit, but really complex.
Yeah, I really love the way that the flavor profiles roll one into the other. This starts out nice and spicy. You feel it in your mouth, and then it kind of rolls into a more, I don't know, there's a Swedish vanilla kind of tint that I'm getting. And, I know we have a different batch, so it might be adding to that, but then it finishes with almost a tartness. And then at that point is when I'm starting to feel the burn, which is kind of cool that it just creeps up on you as these flavor profiles layer over one another.
Oh yeah. Yeah, because I usually with these kind of sherried whiskeys, it's like pairing this with chocolate is good, but I don't know, with this one, it's so complex. I think, being a little traditional as they do in Spain, pairing this with some jamon iberico, this might that might be a perfect addition to sipping on this. But one of the things that's really unique about Compass Box and just about this whiskey in general is that they are extremely transparent with what they put in the bottle, to the point that on a batch by batch basis, as the blends change, they'll update their website and allow people to do research on what's available. So Pete,
Yeah,
I'll let you
something
kind of
like
do the
this.
honors.
Yeah, and it's great. They give you these charts. You go online and you can tell exactly what's in there and in each blend, and it's in proportion. It gives you kind of the story of how things are going to unfold for you. It's pretty cool on their website.
Yeah, I mean, most distilleries are not that in depth, and most whiskey drinkers aren't that in depth. But you and I are not your average whiskey drinkers, so
Cheers to that.
I know you and I appreciate that kind of thing, and that really blends well into our episode today because I know you're a very research focused guy. You're really into data and analytics, and so I think that'll play well into our episode today. So. Pete, why don't you just tell us a little bit about yourself? How'd you get started in the industry? I know you have a unique story that I think people will really find interesting.
Yeah, it is an interesting story. It's a little bit off the beaten path. I was in college and doing unrelated sales work in a different industry, and actually answered. This is how long ago it was. I'm dating myself, but I answered an ad in the paper, and met some people, and they turned out to be a trading firm, and there was a stock brokerage attached to it. And it was suggested to me, I was studying at the time physics at UCF, and it was suggested to me that they were looking for people like me, and it might be a good idea to just make a jump and join the business. So I actually at that point left school early, joined this firm, worked my way up over the years. This was back in the very late 90s, right as it was turning into 2000. And over the next few years, worked myself up to a director of trading position in an equity market making firm where, we were taking orders from other broker dealers and taking positions against the customer order flow as a wholesaler. And that was an incredibly fun line of work. I did really well there. But then 2008 happened, and I found myself with the firm closed down. I was an unemployed trader with no education in competition with everyone else on the street who had a lot of education, and I had to go back to the basics. Went back and got a degree over at the University of Florida. I got my bachelor's, then went for the CFA designation, which, you know, is the gold standard in the portfolio management field, and rebranded into that. Trading wasn't coming back. The robots and algorithms had taken over, and I needed to do something a little longer time frame. So eventually I wound up back at the Kelley School of Business in Indiana getting an MBA, and believe it or not, likely to go do a doctorate as well. My end game is when I retire from finance to wind up teaching, you know, in my so-called retirement. I don't think someone like myself is ever going to retire to go play golf or do something like that. I want to be a part of the community. So that is kind of my story. As far as the First National Bank, that was luck. I networked into this role, you know, came in at a very junior level 10 years ago, a little over 10 years ago. And here I am, I'm the chief investment officer, and we manage about $1 billion in client assets. That's private clients in the trust world and institutions as well, hospitals, schools, charitable organizations, and things like that. And we do things differently. You know, we manage individual stock portfolios, individual bond portfolios, whereas everyone else is outsourcing investment management, we're insourcing it. You got a little bit more than you asked for there, but that's me in a nutshell.
No, that's fantastic. And I mean, you know, it's amazing to me. It's like just how much of a leap you made and how successful you've been with that leap, going from studying physics to trading to going back and getting your education and now being extremely successful in what you do. It's pretty inspiring. And so, you know, that's amazing. And that's exactly kind of the types of things that we're looking for. And so you have your own podcast. So today you're our guest, but you have your own of Market Mondays. And so would you mind talking to us a little bit about kind of what your podcast is, what you do, what you want your listeners to get out of it?
Sure. So Market Monday started, and by the way, when you say podcast, mine is nothing compared to what you're doing over here. You don't even see me in mine. You know, I that's going to get rectified. We're evolving, but we soon will be worthy of that title. I think right now it's more of an informational thing whereby we get our market views out to the clients. So I'll do those every other Monday, and you know, we're looking into the Bloomberg and essentially, you know, the viewers get a shot of the Bloomberg screens that I'm looking at. And we're very heavy into the economic data and how that's going to drive the macro world that drives asset prices. And to give you kind of an example, in the latest edition, which was just a couple days ago, we were talking about how CPI, which came out today, you know, the Consumer Price Index, and then PPI tomorrow, are going to have an interplay that allows us to understand what's happening with corporate margins. So, you know, for instance, if the consumer prices are rising at a quicker rate than producer prices are, that means that sales prices are rising faster than input costs, which means that profit margins are increasing across the broader market, and that should be bullish for equities. So we explain things like that to clients, what these relationships are. What does the non-farm payrolls number coming mean if it beats or if it comes in low? What does that mean to whether we're going into recession or whether we're going into, you know, another leg of an economic expansion instead that the Fed might not actually want to see right now and have to jack up rates? So we're talking about how all these puzzle pieces fit together to answer the big picture questions. What's the environment look like? And then we delve into, you know, what is the S&P 500 doing as a proxy for the market, and what are happening with interest rates, along with anything that might be, you know, a salient point like the wars going on overseas, things of that nature.
Mhm. Yeah, so that's, I mean, that's a ton of information that you're looking at, being able to help make decisions on, and you know, as you pointed out, helping your clients make more informed decisions with their investments. And so this is something that, you know, you've got on YouTube. People can go and watch it and really just learn and be you know, bettered for having seen what your insights and kind of how that market is moving. And kind of having somebody do that research on their behalf a little bit. But this kind of leads into the one of the questions I had was, how do you uniquely serve your clients and and you mentioned, this, talking about having the separate portfolios for equities, for fixed income. So kind of what drove you to that decision, and did that drive you to make the podcast, or is it kind of, what's that relationship look like?
So that's an interesting question, especially that tail end. I'll start there because the link between, what we're doing in Market Mondays versus what our value proposition is for the clients, what we're doing there. A lot of times we'll get questions, well, what happens if, so and so is elected and the other one is not, or what happens if this particular number comes in like that? And there's a lot of misinformation from the media
Mm-hmm.
where they're pushing in essentially what I view as an agenda. There's a point of view that's being sold on the news, and instead we think that the clients ought to take a data-driven approach. Look at what is the market actually telling us. I'm not really concerned with what a media personality is telling us. I want to know, what is the actual data telling us, and we are going to make our decisions based on the data and how that and so we're getting that point across through Market Monday. That's our value proposition, actually, and why we do things in an individual portfolio. So, to come to the first part of the question, everyone, or I shouldn't say everyone, but most of our competition in this space is outsourcing the investment management function and the research function. They're looking to aggregate client assets into one unit there, one pool, and then manage it and manage the relationship and let other people worry about how the money is being managed. So, it's cheesy, but I'm going to give you a tagline that we give our clients. And, we're on Donnelly Street in Mount Dora, Florida. It's a small town northwest of Orlando. And I'll say to the client, look, our investment decisions are not being made on Wall Street. They're not being made on LaSalle Street. They're not being made on Market Street. They're being made right here in this building on Donnelly Street. And, people eat that up because they know it's right here. We are building the portfolio tailored to their needs, and we're doing it in an independent fashion. So that's really the crux of it. And the way that's done, kind of the secret sauce, which isn't any secret. There's a thing called modern portfolio theory, which came out, and the papers were written on that in the 1950s by Harry Markowitz. So it's still
Mm-hmm.
modern portfolio theory. I don't feel so modern, and I was born in the 70s, but, looking at it like that, the theory is, and this uses a very not complex, but an intense mathematical process to optimize trade-offs between one thing or another. And in this case, in our portfolio right now, we have 57 different stocks in our stock portfolio. So we're optimizing, we're finding the optimal amount of each ingredient that's in there that minimizes the amount of risks that we're taking for the return that we're targeting. And by doing so, we deliver a lower volatility than the market, but in line with the market return. And generally, our clients as a trust department want lower volatility. They want the safe stuff. So what we're doing is providing protection in the down markets. We want to lose maybe something like this when we're wrong, and when we're right, we want it to look like that. And the mathematics themselves take care of performance, at least keeping pace with what would be expected. And then we're left to figure out how to achieve the client's goals. So it's our job to say, well, the client is here and wants to get there. How do we best do that in an optimal fashion without taking undue risk?
That's great. And so it sounds like, your clients get a lot of specialized attention, kind of bespoke service that other folks may not be providing. And so with all of this data, with all this analysis, that is really, propelling you guys in what you're doing, and allowing you to do the things that others aren't, which is an amazing value proposition. And so with all this data, you're monitoring what the market's doing, what trends are going to look like, kind of forecasting kind of how the future is going. And so to put you on the spot a little bit, what do you think the next biggest trend is going to be in the market? I know, a lot of people talk about AI, direct indexing, ESG. I know a Wall Street Journal article came out this week about ESG is the newest corporate, bad word in corporate America. Things like that. So kind of interested in what your take is, like, what's the next biggest thing, or is it something that nobody's talking about right now?
It's an interesting question, and I'm not sure there's an answer. I want to preface everything I'm about to say with a firmly held belief. Well, two of them. First of all, nobody can accurately predict anything really well into the future. It's just a fact. There's nobody, myself included, that can do that. My job as a money manager is not necessarily to make great predictions. It's to position so that, regardless of what happens, we had at least a reasonable outcome or a less bad outcome than what would be expected otherwise. But with that said, we do have to forecast. And, in terms of the next biggest thing, it is funny you mentioned that the blowback against ESG, and I think that's going to continue because there was a certain amount of, that philosophy being pushed for many years aggressively by folks, including at the CFA Institute. And it became kind of mandated that, hey, you have to think this way, when in reality, when you look at the facts are kind of mixed. And our job as a capital allocator or investor is not, on behalf of clients, is not so much to stand behind various causes, whatever side of the aisle they're on. Our mission is really to maximize the value proposition of the client. So we can't really invest based on the ESG type considerations. Not to say that we don't have them. My group does have socially responsible investment policy that we believe, covers a lot of those bases. But the reality is we have to go where the money is going to be made for the clients. That's why they hired us. So I don't think it's ESG. I actually think this blowback will probably continue. In terms of AI is extremely promising. There's a group I work with in another capacity where they're a trading firm. And I had a demonstration firsthand of what this chat GPT can do for a trading firm. And I watched somebody literally type a few sentences into that module there, into that box. And the machine spit out a perfect, curve. It was a perfect option adjusted yield curve. And when you're looking at something that's that powerful, there's definitely potential there. But that might also be overblown. At the end of the day, the machine doesn't understand nuances and reasonings why certain things might be happening. Mm-hmm. Admittedly, neither do we all the time, but the machine is incapable of it. It takes an algorithm and says, okay, if this, then that. And then there's a series of nested statements like that. And that's how you get things like the flash crash that happened a number of years ago, where everything just kind of cascades. So, and that's how you get autopilot on Tesla going wrong and generating a big recall. And you really have to be careful putting too much faith into AI, but at the same time, you can't stay behind the curve on it either. So I think that's where it's at, to answer your question.
Absolutely. I totally agree. And, we have our own AI that we utilize with our clients. And so one of the things that I always say is that to kind of warn against over reliance on AI is that AI really helps you enable better decision making, but it doesn't make the decisions for you. So if you use it as an enablement tool, then I think you're doing it right. If you use it to replace, your own thought process or your own procedures, then that's likely when you're going to end up hurting a little bit. So, but thank you for that insight. And kind of last question that I have for you, and this could be personal, this could be work related, kind of up to you on how you want to answer this. But we just kicked off the new year, so what are you most looking forward to in 2024?
There are a lot of different angles I could probably attack this with, but that's a good idea. Hold on, let me take a moment.
You can always pause to think with a sip of whiskey.
It's funny how clear everything becomes. 2024 is going to be a very interesting year. We've come off of an extremely bullish market phase into the beginning of this year, and it was unexpected. We had all sorts of bad news coming in. There was evidence that the economy is slowing, which is bad for corporate profits. There's evidence that the economy is too strong, conflicting with that, which is evidence that, says, hey, the Fed's going to have to continue hiking, even though that's not expected, which is also bad. You've got wars raging around the world, serious wars, and potential pall hanging over Asia at the moment. And all of that stuff you would think would tend to depress asset prices, and the markets just relentlessly marched up. and into the new year, and it's found some more footing again. That's the sign of a bull market. And when the market can shrug off the bad news and continue to go up, and we have fears of a recession, and it's justifiable. I mean, the Federal Reserve, the media is out there talking about how we're going to see a soft landing, and I'm going to quote that. The soft landing is actually, if you use the hard academic definition that's been in place for a long time, has happened once. If you relax that, there are a few papers out there that said it's happened more than once over the past like 60 years. And those don't give very good odds to the historical probability or, situation of, hey, we're going to see a soft landing this time. If it's happened once over the past 60 years over numerous hiking cycles, I'm not going to put too much faith that we avoid a recession now, despite whatever's talked about. So we have the potential to see a recession. But with the equity market being a forecasting mechanism out, the collective wisdom, the wisdom of crowds, a year, 18 months, 2 years out, it's entirely possible that bear market in 2022 was forecasting the recession that we may or may not see this year. And so we might actually see the most interesting configuration, in my opinion, which would be a recession and a bull market existing in the same thing. I'm interested at the possibility of that happening because it looks like it could. I don't give it high odds, but I do see some probability of it existing. And on the other hand, if there's a sell-off that gets us from 3.7% unemployment back to the natural rate of unemployment, which is around 5%, that would just be resetting the economy for a more sustainable path forward than it's been on since we recovered after 2020's crisis. So there are a lot of things in play. I guess what I'm looking at, 2024 is very exciting. There's so many variables and things could go so many ways. And there are all these great minds are in this business. The investment management field attracts a lot of very sharp people. If you're not staying up with your competition, you're going to lose. And so everybody's in there trying to figure out what's going to happen. And it's just an amazing business to be in right now.
Yeah, I totally agree. And it's going to be very interesting to see how this year plays out. Kind of as you mentioned, seems contradictory that we could be in a bull market and a recession at the same time, but it's not impossible. So very interested to see how this year turns out. Interested to see how Market Mondays keeps going. Now that I am a full-fledged listener, helps keep me up to date on how things are going. But it's been absolutely wonderful talking with you today, Pete. I appreciate you joining us on Whiskey and Wealth Tech. For all of our listeners out there, if you've got any questions, comments for Pete, please feel free to ask us in the comments or reach out to us, and we'd be happy to answer that on our next episode and get those answers there from Pete. But thank you for listening, and we'll catch you next time here on Whiskey and Wealth Tech.
Thank you for having me. It's great to be here.